Hi traders, this is Brad Gilbert with the FX Market Insight for the 8th of June. Now, let's have a quick look at the US dollar, see what's sort of happening there. I know it's sort of broken down a little bit. It's gone through like a support line here around 93.80. It is slowly moving a little bit lower, but it does seem to be stabilizing. Once again, there's been no major US news out this week, so it hasn't had much. There's been no momentum sort of following through from last week. And if anything, the stronger euro and sterling has prompted that move, more so than weak data, weak US numbers. Now, if we just have a quick look through the numbers sort of yesterday, we had a little bit stronger UK house prices out of Halifax. Eurozone GDP, the revised numbers, as expected, sort of right on the money. Initial jobless claims pretty much close to the mark as well. Consumer credit a little bit down. But so the US dollar sort of just grinding lower, but nothing really to get concerned about at this stage. I know a lot of analysts are starting to call the US dollar down a long way. I don't see it at this point, not until the Fed changes their stance. So when you come back to look at the major currency pairs and where we're at, the Aussie, massive underperformer, even though we had stronger GDP, sitting around 76.20. Kiwi just trading sideways, and as you see, when it trades sideways, it can just trade straight through those support lines. One thing of note is I've got the dollar yen here. It's just broken down through the cloud and through support around 109.85-ish. I've got the US 10 years overlaid on dollar yen. It's a pretty good indication. You can see how closely these two pairs are correlating. US 10 years drifting lower, putting downward pressure on dollar yen. That may continue as we head closer towards the G7. There's still so much uncertainty around the US and what Trump's going to come out of that. So that may lead to a move lower. And I'll show you where the good opportunities are on the yen crosses there shortly. Euro, it has managed to slowly climb up through, through 180 in the figure, I guess. And it does to me look like it's had enough and it's on the way back down. Sterling, we did have those stronger Halifax numbers. It has topped out, but this has had a pretty good run, sterling. It's in a short-term upward trend channel. Brexit is now starting to weigh on it. I mean, that should have sent it lower, and now we're sort of just trading sideways. I think that's probably had its run to the top side as well. And dollar CAD, you've got oil here back at sort of almost $66. The Bank of Canada last night, Paul Oz, has mentioned they're very concerned about the potential implications of trade tariffs on steel and aluminium. They are going to start forecasting those tariffs into next month's numbers. So that's going to be quite interesting for the CAD. But at this stage, it's still a very tricky situation. So what does that leave us with? Well, when you come back to looking at what's coming out, you have to keep your focus on where the next major sort of events are and what tangibly can we see and what can we hit. Now, I've got the next major event. Now, there's a few coming out in Europe, but this is sort of talking about potential high-impacting events that can really influence the market. The CAD employment numbers, pretty much the last one off the rank for the week. And this is leading into the G7. I think this CAD employment number can be a good short-term opportunity, but really it's the G7 is going to determine things. So I don't think many traders are going to stay in that trade, regardless if it's a good opportunity or not. And then when you come back to look at the correlations, the good thing is here, you can see the currencies are correlating quite nicely. Euro, sterling, Aussie, Kiwi all going down. Dollar CAD up. I guess if anything, the odd one out's dollar yen. Now, dollar yen is a bit of a tricky one because we've got a bit of dollar weakness creeping in with the G7. But don't forget, June 12th, we're supposed to have the meeting between Trump and Kim Jong-un. If that's cancelled, well, then I expect dollar yen to move lower as they buy the yen safe haven trade, primarily because it would sort of signal that there's a major breakdown. There's a massive trade war coming up. What do? You buy the safe havens, and that's where the yen comes into play. Now, just on the yen, I mean, this is where I see really good opportunities coming up. And this is where the yen crosses, okay, they're a proxy for the majors, but you can really see great opportunities here. Now, I was looking at the yen crosses yesterday, just waiting for the build-up. I didn't get proactive, and I'm a little bit pissed off about that. You can see, technically it's sort of broken down, but we know the Japanese traders treat the yen crosses like the majors, and they're looking at the cloud. You can see the cloud breaks here, Aussie yen, Kiwi yen, through dollar yen as well. and then also CAD yen up here as well. They were all really good opportunities using the Ichimoku trader to get into those break trades. Okay, now you got 4 here of the top 6 moving down. What are we left with? Well, we've got a nice setup here technically and with the cloud with sterling yen. This is, I think, potentially the best trade in Asia. We could see a massive clean out to the downside here, and chasing that will be euro yen as it primes through the bottom of that cloud there as well. So to me, the real cracking opportunities, number 1 is sterling yen, and number 2, euro yen as we lead into Friday's trading. Now, this is where you can get it really organized with the numbers. Now, if I just come back to the main screen here. Okay, so this is where you can piece things together. Now, the Japanese data itself isn't necessarily, let me just move this other way, isn't necessarily like an awesome event. Usually it's very benign. I mean, the Japanese economics is usually pretty static. Now, just have a look at the Nikkei here. It's due to open up down 228 points, or actually net change, minus 140. Sorry, I should make sure that's right. So it's down 140. That's our starting point. US equities or the Dow Jones closed pretty much flat, 0.3 up, but 140 down. That gives us something to really work with, primarily because we've got the Japanese GDP numbers. Now, for most people, I'd say 98% of traders who trade the yen or economic numbers get this wrong, right? Japanese data, it works inversely to the yen. If the GDP numbers come out weak, that will put downward pressure on the Nikkei, and that will put downward pressure on dollar yen, right? Weak Japanese data doesn't mean you sell yen, buy dollars. It does not work like that, right? This is, just about everyone who hasn't either worked, even a lot of guys at the banks, I should say, but everyone who hasn't actually had a major experience in this market will get this wrong. So what I'm looking for is weak GDP numbers out of the Japan. I'm expecting that 140 to go down to minus 200, and that's where we'll see major pressure on the yen crosses. And that's where sterling yen should really take off, and euro yen for that matter as well. It's a really good opportunity. If the numbers are stronger, well, I think sterling yen is still a chance on the downside, but it's going to slow the dollar yen move to the downside down a bit. All right, now last thing, just a warning for the weekend. I mean, generally, I don't like running positions over the weekend anyway these days with all the chances of terrorism and geopolitical events. This weekend more so, if you are one of those loose cannons that do run positions over the weekend, the G7 is going to be, it could be extremely messy, it could be really clean. I expect Trump to come in and say sorry to everyone and we'll work out some deals. That's what I'm expecting. But if that doesn't happen and it is a mess, well, then we are going to see the majors all over the place come Monday open. So make sure you don't run positions over the weekend. Outside of that, if you're looking for an opportunity, we've got some German industrial numbers out here, output. That's probably worth having a look at. If there's major variance there, we could see an impact. But really, the major opportunity or economic data-wise is going to be the Canadian employment numbers. It's a very loose number, very much like the US non-farm payrolls. You're focusing on the change, okay, first and foremost, and keep an eye on that full-time. Most of these services put it as a low impacting feature. It is a very important component of the number. Any big change in full-time will have a bigger impact than the employment change, right? That's another thing that a lot of people or a lot of news services don't understand. The traders, it's more structured full-time employment. There's holiday pay, there's superannuation, all sorts of things. So just make sure you keep an eye on that. It's going to be probably a short-term trade, as I said, as we head into that G7 will dominate. All right. All right, guys, that's it from me. Have a good week. I'll see you in the trade zone. If you have any questions, jump online there and I'll do my best to answer your questions. All right, chaps, have a good one. We'll catch you later on. Cheerio.